Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as far as the markets are concerned, the Nifty is up for the week so far after a strong start of this February F&O series. However, the last two sessions are proof that it is still lacking the strength to cross the barrier of 21,800. Now, since the interim budget was a no surprises budget, a status quo budget largely, and it was also the weekly options expiry, it ensured that the Nifty ended near the lowest point of the day, almost at the same levels that it ended as far as Wednesday was concerned. But what will be the key triggers now to pull the Nifty higher from here? We will tell you all of it, but first up, the top headlines this hour. Indian stocks are likely to regain their upward mojo on Friday as strong overseas cues and the market's appreciative view on the government's fiscal steps in the interim budget enthuse bulls. Earnings will continue to dominate sentiment on the Lal Street. Auto giant Tata Motors and top airline Indigo will present their third quarterly performance. Separately, earnings from Indian hotels are likely to be appreciated by the investors. Very good morning to you viewers, and good morning to you, Shail, as well. As I was saying that for the week, the Nifty is up about 1.5%, and that's courtesy Monday's surge. And however, it will snap the 2 weeks losing streak as well if it manages to now close above 21,352 odd levels. And that's the key right there as far as levels are concerned. But Shail, what is the sense that you're picking up? The big events done and dusted, be it the interim budget, the US FOMC indications as well. What next will pull the markets higher from here?
So Sakshi, my one piece of advice is tighten your seatbelt and we are now headed for higher zones. And the highest zone so far has been 22,124, which we saw somewhere on 16th of January, if not around that weekend. That is about to be taken out. You are seeing very, very strong cues coming in from GIFT Nifty, an opening of about 150, 180 points higher. And I'm fairly confident, Sakshi, that the run up now to the elections has started. And let's see and let's aim for, substantially higher levels on the Nifty from what it is now, 21,700. So the most recent high, which is 22,124, is obviously will need to be crossed, and that's going to happen fairly soon. And from then on, you'll see a higher trajectory, probably a change in the digit as far as the Nifty is concerned. So 22,000, and then maybe in the span of 2 odd months, we'll see another digit change, which is somewhere to the vicinity of 23,000. And I will tell you why. Yesterday's interim budget is a document that lists the fiscal glide path of the government, and that has been very well appreciated by the market, and it has been digested phenomenally well. You see, Sakshi, what is going to happen is that three positive things have emerged. This is after all the dissection has been done in the evening and late night, and this is the view that is coming into the market from at least the institutional players, which is that the gross and net borrowings are targeted lower. I'm not going to bore you with the numbers. I'm just giving you broad thrusts. You can check the numbers from the budget document. So my expenses are going down, therefore fiscal deficit is targeted lower, somewhere in the vicinity of 5.1%. My income, which is the tax receipts, are going up to the extent of about 11.5%. These are all projections, and I am going to spend that increased income in sensible things like improving the rail corridor, seeding demand in the housing sector by constructing 2 crore new homes over the next 3 years. So this is a very, very big plus to all the economic sectors. Logistical costs are likely to come down because of investments, fresh investments in railways. Construction will lead to a wider application of the good parts of the economy. You see, construction sector, the real estate sector, Sakshi, is India's biggest employer. And that is the reason, Sakshi, yesterday we saw a rally in the housing financing arm of the government, HUDCO, the construction arm of the government, NBCC, the entire PSU banking pack, because they will be the main financiers for all potential loans taken, and hold your breath, even housing finance companies which are state run like GIC, PNB, LIC. So it is a sectoral move, and this digestion of the fact that the fiscal path is clear, it is trending lower, the income part is clear, which is headed higher, and the expense part is clear, which is aimed at all the good parts of the economy. This has been digested very well, and apart from some unforeseen happenings, my understanding is that we are headed much higher in the market. Of course, there will be corrections, and oil is not a troublesome spot any longer. The Middle East war probably might sort of go sideways. There's nothing much happening there in any case. So these are positives, and we should now get ready for higher and higher levels on the Nifty. Kursi ki peti bandh lijiye, or buy and hold will work much better than consistent trading, Sakshi.
Okay, buy and hold and get ready for higher highs on the markets, especially the Nifty. Let's also talk about the Nifty Bank that actually turned out to be the outperformer, as the government's fiscal consolidation part that you also talked about really sent the PSU banks rallying in trade yesterday. The state-run lenders supported the index, ensuring that it closed above the 46,000 mark for the first time after January 20th as well. And now with that, the Nifty Bank is up nearly 3% for the week. It's all set to snap a 4-week losing streak as well. Where do you see the participation increasing now as far as the banking space is concerned? Are you keeping an eye out on the private banks to follow up this buying?
Sakshi, the overnight ADRs within the private banking sector appreciated the government's move as far as markets are concerned. And that, I think, is an indicator as far as the potentiality of the move is concerned. You and I have been speaking to a host of market participants who are on the long only side, people like Saurabh Mukherjee, lots of other PMS fund managers, and all of them point to the fact that the private banking space is wonderfully and attractively priced when it comes to long-term moving averages on price to book, price to earnings. In any case, their earnings were fantastic. So I think private sector banks, and therefore Bank Nifty, are likely to look up. Just appreciate yesterday's move on the Bank Nifty. When you see yesterday's low, it was somewhere in the vicinity of 45,660, and we closed at 46,188. So that's 200 points and somewhere like 300 points. It was an uptick of 550 from the day's low, and the index also closed 190 points higher. So the pull up was because of the better fiscal math, and that is going to impact the Nifty Bank very positively in the coming weeks, Sakshi.
Okay, as far as the F&O space is concerned, Shail, any particular stocks that you're keeping an eye out on today?
Sakshi, we have a host of earnings coming in. overnight, and two of them are a bit disturbing, and they are in our favorite sector, which is the auto space. We'll be looking out for two stocks, which is TVS Motors as also Hero Motors. Remember, both of them are at record highs, but the numbers that came out were a bit disconcerting. Slight underperformance from Hero Motors. The sales for January stood at 4.33 lakh units versus an estimate of about 4.5 lakhs, and those for TVS Motors stood at 3.4 lakh units versus an estimate of about 3.5 lakhs. So a bit of disappointment might creep into these two stocks, and no complaints there, because both of them have run up very sharply. There is a digit change in Hero Motors for a long while. This stock wasn't doing anything, but if you look at the price now, 4500, fresh record high, and the less price that you can give to TVS Motors, the better, because it's been one of the accelerators of 2023. So those are two stocks that I'm looking at. Then a blowout in earnings as far as Indian Hotels is concerned. That is something that we'll track, and of course the big boy of them all, Tata Motors earnings today, Sakshi. We'll be keeping an eye out on them, and Indigo. Both leaders in their spaces, and both stocks doing fantastically well, backed by very strong fundamental performance. Sakshi.
Absolutely. Well, Shail, also now let's look at what the global setup is like and how the foreign flows have shaped up. FII's net sold worth about 1879 odd crore rupees in yesterday's trade, while domestic institutional investors also purchased about 872 crores worth of shares as well. As far as the global setup is concerned, we did see that the US markets ended sharply higher. The Dow Jones ended at fresh record highs overnight, adding 1%. The S&P 500 and the Nasdaq also gained over 1% each in yesterday's trading action or the overnight action. Well, as far as the Asian markets are concerned, markets in the Asia Pacific rebounded after the Fed's one-day sell-off, and they are aiming to end the week on a positive note again. The Nikkei is up by 0.4%, Kospi, South Korea, both of them gaining about 1% as well. And this Kosdaq index also was up in trade as well. So that's as far as the global setup is concerned, and the GIFT Nifty is indicating a positive start for the Indian markets. As far as some of the stocks are concerned, remember this will be the second day when we will keep an eye out on Paytm. Yesterday's 20% downtick or the lower circuit that was hit after RBI's restrictions. There was an investors' con call where the management did say that during the analyst call, the RBI's actions are big speed bump, and that there will be a requirement to have some of the operational changes on which the work has already started. Until that time, the operational changes will be made. They also said that they will pause the origination of any new loans for a couple of weeks as well. So that will be one stock that we will continue to watch out for. Hero Moto already pointed out by Shail. Here the total sales that were reported by the company were up 21.6% to 4.3 lakh units. That will be up in trade, and exports have risen. Actually, that's the point that at least we will be watching out for. That was a bright spot for Hero Moto in the sales figures. Indian Hotels, here the numbers came out positive, in net profit up 18% to 476 crores, while the revenue also increased 16.5% from last year. EBITDA increased by 22.6%, and the margin stood at 37.3%, a very strong surge over last year, and 7th consecutive quarter recording financial performance on the positive side on all the parameters for the company. So definitely a big positive for that one. Emphasis is going to be in focus. Here the direct revenue was up 2% sequentially on a constant currency basis. New deal wins was about 85% higher, $241 million, and of which a lot of them are from the new generation services as well. So that's something that we will watch out for. Apart from this, we will also be watching out for Bata. The revenue was flat for the company. The gross margins up 130 basis points. The net profit, however, was down 30.3%. Looks like the company has been facing some kind of a shoe bite, and we will continue to watch out for how the stock really reacts to some of the pain in the earnings. City Union Bank, here the net interest income of the bank and the net profit missed the investors' estimate, and deposits, however, grew about just 2.3% on a year-on-year basis as well. Margins lowest in at least 6 years, and that's going to be another pain point for the company. Minda Corp, that's going to be in focus. Here the revenue is up 9% from last year to 1165 odd crore rupees, and the EBITDA also up by 13.8% over there. So these are some of the stocks that I'm watching out for. One more stock from the railway space, and that's RITES, that again reported its numbers. Here, the revenue was flat at 683 crores. The net profit was down 12.4%. So we'll keep an eye out on this one as well, because the railway space has been in action up and about for a long time. And now we are going to be watching out for our guests who will be joining us pretty shortly. Shail, what else would you be looking at?
Sakshi, I think I'll just check the tone and tenor of indices other than the Nifty and the Bank Nifty. I'm hoping for more rallies coming in on mid caps and small caps, because you see the hurdle, not exactly a hurdle, it was an event which is now out of the way, and now there is a clear path in the market. So I don't see any kind of profit booking affecting the Nifty Bank, I'm so sorry, the Nifty Mid Cap Index, the Nifty Small Cap Index. In any case, they have been doing fantastically well in January despite the volatility that we have seen. So these are the two things that I am looking at. A strong show continues in the PSU basket. Railways will come back in the focus. Renewables and aquaculture fisheries will see an uptrend. So all I do late evening is try and look at stocks which might be in this space and which might provide value even at these elevated levels, Sakshi.
Okay, all right. We have our guest with us. Kiran Jani now joins in, Head of Technical Research at Jainam Broking. Kiran, very good morning to you. Good to have you with us. The interim budget, the big event, is now done and dusted. How are you really looking at the markets post the budget now? What are the triggers that you see for the markets? Any particular stocks that you'd be watching out for?
Very good morning, everyone. So let's start with the indices view. First of all, as you mentioned about the interim budget, so market was waiting for the interim budget and as well as the Fed policy. The both high voltage event is being over. And similarly, as soon as the event's over, we are seeing that VIX is cooling off from the high level. We have seen since last week, VIX is trading somewhere around 16. Now it's trading at 14.5. So there are very good chances that we are seeing market is going to trade in a range only, where the stock specific and mid cap and small cap stocks can have a rally further, as we have seen in past also. Now coming to the Nifty point of view, as we are seeing that the market is facing resistance over 21,700, 800 level as the maximum open interest we are seeing from call side. However, we are seeing the PCI ratio which is trading somewhere around 0.70, 0.60, which are the oversold trend. So there are chances that we can see spike towards 21,800 to 21,900. Until and unless market is closing about 22,000, then we can expect some rally over the index. Otherwise, index is going to remain in range of 21,900 to 21,500. Either side breakout will lead the trend. Our focus is majorly on the stock specific and the sector specific rather than the Nifty levels. Coming to the Bank Nifty, we have seen recently Bank Nifty is corrected from all-time high to 44,500 to 44,400, where Bank Nifty has found support somewhere around 200 days moving average. Recently, market has found the support over 200 days moving average, and now it is trading over its 100 days moving average also. So we can see some sort of short covering on Bank Nifty side as soon as far as they are holding its 200 and 100 days moving average level wise. 45,400 would be the immediate support. If market is not breaking that support, then we can expect somewhere around level upside of 46,800 to 47,000. So coming to the range for Bank Nifty is 45,400 to 47,000. Market will going to remain in this range only. In Bank Nifty, our major outlook or our major focus would be on the large cap PSU bank and large cap private bank. In private bank, we are liking quota. So these are our view that index is going to be in range where we have to focus stock specifically.
Okay, a very warm good morning to you, Kiranji, and I believe Mayuresh has also joined us, Head of Research at Market Smith Securities. A very warm good morning to you as well, Mayuresh. You must have digested the budget overnight. One or two points that you could cull out on the fiscal side of prudence that's come up, and a general understanding of the budget from a point of view of say 15-17 hours that you spent reading the document.
Morning, Shail sir. Morning, Sakshi. Morning, Kiran. So, two things which prominently came out. One, obviously, was the expectations in terms of the revenue targets for the next financial year. Now, what the Exchequer has explicitly mentioned is a growth that we are seeing on this year. So, I think we are expecting to see decent growth in terms of revenue receipts. On top of that, we are just assuming a nominal rate of increase of 1.2%, where the expected growth so far has been in excess of 1.8, 1.9%. So to that extent, I think it is just being a little bit conservative as far as both the revenue targets are concerned and as far as the nominal GDP targets are also based upon. So at 10.5%, a tad bit lower than what the street is expecting, 11 odd percent. So to that extent, I think it's a little bit more conservative. The second element in terms of the capex increase of 10, 11 odd percent. My own sense is that as the denominator, which probably means that as the effect of revenue growth remains constant in the next year, notwithstanding the government being conservative, there might be some added increases in the capital spend because of the leeway that you'll probably get. And therefore, the fiscal path that has probably been put out in a budget year is extremely commendable, which shows the resolve of the government in terms of maintaining the country's balance sheet in a very healthy state. The only disappointment that I would say is nothing came out for the salaried class, which has been a complaint in a lot of WhatsApp groups at this juncture. But let's also understand that this is an interim budget. Not too many announcements can be made. When the actual budget will come through, I think the tax proposals will be there, and I think something should come up at that point of time. So I think decent budget. Assumptions are a little bit conservative, but expectation is that they will over-deliver, and they are under-promising at this juncture.
Okay, very good morning to you, Mayuresh. Help us with your top two stock ideas post the budget now. Have you included anything new after listening to some of the announcements that were made, even though no big bang budgets, but big bang announcements, but some of the sectors were definitely mentioned in the speech.
Absolutely. And again, Sakshi, I think a lot of things happen outside the budget as well. So I think the structural changes that we are seeing as far as the economy is concerned, example being renewables as a space, electrification as a space, I think all those elements as a structural theme will very well continue. And to that extent, I think the allocations that have probably happened across teams, whether it's roads, highways, railways, infrastructure development, I think all in the good spirit and all in the right direction as well. Having said that, I think a couple of stocks that we continue looking at in markets with India. One obviously is high ticket item, power mech solutions, power mech projects. Two things happening very interesting here. One, I think the order book in excess of 55 odd thousand crores itself gives revenue visibility over the next few years. Within the order book itself, they have entered big time into coal mining and operations. So they have won two big orders, one from Coal India subsidiary and one from Steel Authority. To the extent of 25, 30 odd thousand crores for both these entities combined together over the next 25 years, which gives them a very good advantage in terms of the infrastructure development of the country and the non-power segment as we speak. And these orders come with very good margins. So the margins that they're doing at 12%, they should start delivering more in terms of margin improvement at 12.5%, 13% as we head into the next few years. For power mech, the best part that is going to happen is the O&M part. So the O&M part is expected to improve even further in the next few quarters. And because of that, the non-power part of the market, you're talking about refineries as an example. You talk about flue gas desulfurization as a theme, because this theme is going to work big time over the next 2 years. The overall market is around 1 lakh crores. We've not even scratched the surface as we speak. So a lot more things happening here, clean balance sheet, expecting good momentum to continue for power mech projects. The other one that we like and we keep on our watch list is Gateway Distriparks. Obviously, a very sentimental positive announcement made for the sector in terms of 3 more corridors expected in terms of energy, minerals, and cement. But for this company in particular, as the Western Dedicated Freight Corridor comes to complete fruition in the next couple of quarters, the kind of services that you do along the Western Railway Corridor, the 31 rakes that they have, the ICDs, the CFS storage facilities that they have both on the West and the East Coast, healthy balance sheet, cold storage subsidiary to Snowman, and decent numbers that they are delivering every passing quarter. I think this is one stock that we are keeping in lieu of the budget as well as expectation of earnings to be kept on the. So I think these couple of stocks are there.
Okay, Power Mac products, Gateway District Parks. We will continue to keep an eye out on both of these as well. What we'll do is we'll take a very quick break. When we return, we will of course look at the pre-opening action as well as more stock ideas and all the stocks and news. We will take a view from our guests on. So stay tuned with us on Business Today.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra and we're in conversation with Mayuresh Joshi and Kiran Jani. Mayuresh, to you, I want to understand from you on Paytm now. How should one be really looking at this company? We heard the management on the investors call yesterday. After the restrictions, they are not going to be giving out any fresh loans at this point in time. With the lenders, they have said that they are in discussion. How should one be really looking at, what developments are coming in on Paytm?
So, Sakshi, I think the restrictions that have come through, at least on Paytm side of the business, is not a substantial part in terms of their core business. So, to that extent, the kind of hit that they will take and the expectations that the management has put forth, I think the stock reaction has been pretty stark yesterday, and for obvious reasons. The second element now is in terms of their shifting of nodal banks to other banks outside Paytm payments banks. I think obviously those procedures will happen over the next few days and weeks. And as that transition probably happens, along with complying with what the RBI had probably directed, that hit is going to be very, very obvious in terms of the annualized numbers. I think this was one of the fastest segments for Paytm, unfortunately, even though it was a very small segment and a small contribution to the EBIT as well. But I think sentimentally the stock probably takes a hit. So in my opinion, I think there will be those odd bounces which will come through, but the stock will probably remain range bound in terms of trading action. What they had probably achieved in terms of going towards that PAT positive figure, I think that might probably get delayed, and that is what the street is worried about.
Okay, let's look at the pre-opening trades now. The Nifty is showing some downtake, about 163 point off a dip as far as the pre-open is concerned. 21,516, but we'll wait for a few minutes for this to settle down as well. 176 points now down. So it's very, very volatile at this point in time as far as the benchmark is concerned. Shail is also back with us. Shail, what else is looking positive as far as the pre-opening trade is concerned?
Sakshi, I think we look at Indian hotels 10% higher, a blowout when it comes to earnings, and this is of course already a record high on the counter. Obviously this price will settle sensibly towards slightly lower points, but a blowout nevertheless. We'll also look at Paytm, again down 20%. You and I had discussed this yesterday, that another circuit is on its way into the system, 487, and this is a trajectory which is now in the all-time low range. Let's see what happens beyond this. The two circuit filters of 20% each have been hit in succession. So tomorrow, which is Monday, I think the circuit will have changed. Okay, let's pay attention to Market Watch and look at the top index heavyweights. When you see prices, okay, HDFC Bank is opening 1.4% higher, 1486 in pre-open. I want to see what Reliance is doing. It's in the green, 6.7 rupees higher, 2855. Infosys is marginally in the red, 13 rupees lower, 1644. What about the two private sector banks? Flat on ICICI Bank, nothing happening so far, 1025. Axis Bank about a percent lower, 1075. What about L&T? Okay, it's a green tick, minor green tick. 2 down days after earnings that were not appreciated by the market, 3400 to you. Now let's look at the other players in the sector. I'll shift focus to F&O minus the index heavyweights. Top gainer still Indian Hotels, about 8% higher now, 534. No stopping PNB, 2% higher, 121.40. Indigo, earnings boy, ahead of earnings, 2.2% higher. Let's look at the top losers in F&O space. Eicher Motors. This is a disappointment, Sakshi. The numbers not in line. 2.5% lower, 38.42. Let's look at Bata India. Terrible set of numbers. 2.3% lower, 14.23. I'll also focus on City Union Bank. Again, numbers which are not appreciated by the market. 140, 120, 1.7% lower. Quick look at NSE 500. Then we'll hit at Kiran's view in the market. Okay. No surprise here. Paytm down 20%, 487. Let's look at the top gaining list. Sakshi, Hudco, 9% higher, 8% higher, 222, fresh record high. NBCC 5% higher, 149. The blowout continues. Surprise, surprise. Suzlon has now changed a digit. It's now 50 rupees 60 paisa, 5% higher, which is the intraday limit. And some moves coming in on Borosil Renewables, 642.8% higher. The Nifty now in the green, 24 points higher, 21,721. Let's get Kiran into the conversation. Kiranji, you've mentioned two stocks that you've already preferred, which is Adani Ports and IndusInd Bank. Anything that you want to convey on the PSU basket that has been surging dramatically? Any picks there?
On PSU stock, if you check the PSU bank index, it was on the consolidation phase. Yesterday we have seen the breakout is coming out for that consolidation phase. Similarly, we like State Bank in PSU basket. Honestly speaking, reason being, recently it retested its previous breakout of 600 level, which at that same level we have seen that stock has found the support of 100 days and 50 days moving average. Since last 5 days, we are seeing that State Bank is trading into the height of high bottom pattern, and it has formed inverted head and shoulder pattern on intraday charts also. So State Bank looking very good on valuation front, and we have a comfort also on chart perspectives also. The momentum indicator is heading into the bullish zone also. So I believe that State Bank would be the preferred choice. Any dip or at current market price, we would like to go long on State Bank, keeping a strict stop loss or a very aggressive stop loss of 620. And looking at current market price, we are expecting prices to touch 680, 690 in upcoming time. So if you are okay to give a time of 15 days to 20 days, State Bank would be the preferred choice in PSU basket.
Okay. Mayuresh, coming to you, a very, very strong show on the earnings, on the stock side on Hudco and NBCC and the entire housing, quasi-housing package when it comes to the PSU basket. Housing finance companies are up, constructors are up, land asset companies are up, financiers are up. Anything that catches your fancy which you think is underpriced?
Shail sir, I think very few things are underpriced, very frankly, at this juncture. But I think the news in terms of HUDCO getting into infrastructure financing, I think that's the trick that has happened for HUDCO. Obviously, power financiers, if you talk of PFC, REC, REDA, have done exceptionally well in terms of the opportunity and the size of that opportunity over the next few years that are available to them. Well, so obviously, I think high dividend yield stocks, all of them as we speak. And therefore, I think this structural tailwinds is probably keeping them in place. But again, my own sense is that with all these activities happening around, keep a watch for construction equipment players. They may be on the private side, but there is huge scope in terms of the infrastructure development that these guys can do.
Mayuresh, 20% now down on Paytm at 487. How would you really advise investors to look at this? Many would be looking at this favorably, perhaps looking to buy the dip at this point in time, because 40% down in 2 days, and when the circuit opens, many would want to buy this. Would you see this as catching the falling knife, or do you see this as attractive valuations?
So that's for me, Sakshi.
Yes, Mayuresh.
No, again, as I said, I will wait it out because you need absolute amount of clarity, and that will come through in the next few weeks. And now the markets will like to see what probably happens in the next few weeks, what happens in terms of the quarter numbers. As I said, there will be a bounce at some point of time, but there will be range-bound trade action now. Once this, I think a large part of the price damage is now done for the stock. So somewhere I think the bounce will come through, and then it will get stuck in the range, waiting for clarity to emerge in what is happening in the next few weeks and the kinds of numbers delivered in the next few quarters. So again, I think it's gone back to that mode where it probably gets stuck in a very tight broad.
Okay, let me get Kiran now on some of the stocks that are buzzing in trade. Kiran, how would you look at BEML? The stock has been in constant move over the last many days. Even again today, I can see another very smart move on BEML coming in, almost to the tune of 1.5%, 2% or. How would you really look at the stock now?
So looking at BML daily price chart or a weekly or a monthly, the stock is in extraordinary bull run. We already had discussed this stock multiple times at level of say for example 2700 and 3000 level, where stock is supposed to give a breakout from recent consolidation. With that, stock has formed multiple ascending triangle pattern. So looking at all pattern, target was somewhere around 3800 to 4000. And now nearly stock price is trading at same level. So at current market price, we are not advising to add any more further position. Yeah, whoever is holding this position, keep hold this position with a strict stop loss of 3500 or 3600. We are expecting prices to touch 4000, and once the 4000 will cross, we can see further upside also. But at current market price, risk reward ratio is not favorable. So for any further new addition, we would like to ask people to wait and watch. If price is falling somewhere around 3700 to 3600, we can add that particular level. Keep a strict stop loss of 3500 for those entries also, and target would be a 4000.
Okay. One more space.
Okay, Sakshi, let's
yes,
mark
Shail.
a little more in prices. The Nifty is now firmly in the green, 115 points higher. 21,800 Sakshi is our trajectory. For today, the Bank Nifty settled about 380 points higher, 46,568. And I have the best news for you. All 10 index heavyweights are in the green, and that's a very, very positive start. That means that the indication, the hint that the government wanted to give in the interim budget to the market is now working its way into prices, and you will see a very, very strong up move over the next 1 week, 2 week, 3 weeks, of course with the due corrections that are there. But the trajectory is that we are headed higher. Let's look at the railway space. Remember, that was one of the biggest beneficiaries. Texrail opening 5% higher, 229. This is a record high. And I'll get Mayuresh into this conversation because about 2 weeks ago, one of the stocks he picked up was Texrail at about 180 rupees. Very, very strong set of earnings coming in. Mayuresh, your view.
So, Shamsa, two things happening. One, obviously the earnings tailwind, and yesterday's announcements that the Exchequer made in terms of refurbishing the old wagons into Vande Bharat wagons as well. I think a lot of these guys, Texmaco, Titagar, Jupiter, their core functionality also is probably to ensure that freight wagons are probably made and maintenance of that. So there might be a huge opportunity coming their way over the next few quarters in lieu of what is already expected to come. Obviously, they're expanding their capacities to a certain extent, which means that the kind of revenue visibility, execution, margin improvement is all for the takes over the next few quarters and years, and can have a structural compounding growth as far as numbers are concerned. So anybody holding on to these stocks should definitely hold.
Okay, let's look at the markets now. They're settling in the pre-opening space, and in the Nifty, I can see a lot of banking names really, flying high. ICICI Bank, Kotak Bank, which was mentioned by Kiran. in his top picks as well. Both of them are among the top 5 movers. Apart from this, we have BPCL, Coal India, ONGC. So the oil and gas stocks are getting back in flavor. Adani Ports after the earnings, and also the brokerage houses updates is about 1.5% up in trade as well. To you, Mayuresh, on Adani Ports, how would you really look at this stock? A lot of brokerage houses are now pegging the stock at 1500 target price as well, including brokerage houses like Avendus after the earnings.
So I think within the group, I think this is more structurally better placed, both from a valuation perspective compared to the whole group and expectations in terms of earnings delivery over the next few quarters. Obviously, the mechanized operations that Adani Ports have is going to be a significant game changer over the next few years. The kind of exim trade that can compound over the next few quarters and years, as far as India is concerned, that can have a compounding effect in terms of the volume growth as well. And therefore, assuming reasonable amount of volume growth in double digits, they are already having relatively higher EBITDA margins because of their mechanized operations. And expectations in terms of more sum of parts coming through in terms of development of the land parcels around it can have a significant impact in terms of the EPS growth as well. So numbers should keep on coming in a very steady fashion, and therefore anybody holding on to this stock should.
Okay. Kiran, to you now, apart from the private sector bank that you mentioned, Kotak, in the PSU banking space also, are you looking at favorably any side or set of stocks after a strong move yesterday, 3% odd? The index is again up 1.5%.
We already shared our view on SBI. Another stock which we are liking in PSU stock, that is Indian Bank. Indian Bank has already given a move from 400 to 500 level. Still at current market price, we are seeing that prices can move further. It has given a wonderful breakout on weekly and monthly chart also, and the risk reward ratio is also in favorable terms. So if any dips comes around 520 to 500 level, we would like to go long on Indian Bank, keeping a target price of 560 to 580, keeping a stop loss of 490 for this trade. So Indian Bank would be the next pick in PSU basket.
Okay. Right. Let's look at some more movers then on the Nifty 500. We do have Hotco that was closely tracked by Shell over the last many days and 6% higher. It's the top mover again today. Indian Hotels, good numbers, and of course it's getting rewarded, 4.3% higher. Infibeam Avenues that I have been mentioning for last few days again is up by 3% odd. Then you do have IRB Infrastructure that's been in momentum, 2% higher for this one. Central Bank of India, 2.5% higher. Container Corporation of India, that's 2% higher in trade. Gujarat Pipavav Port, also 1.5% higher in trade as of now. Among sectors, we're looking at all the sectors that are moving up positively in trade. And there is no let up. You can actually look at all the stocks and sectors as far as the 19 indices that we track. They're all up and buzzing in trade. PSU banks, oil and gas, Nifty bank, metals, broader markets, private banks, royalty, they're all upwards of 0.5% to even 1% higher in trade. Marisha, the oil and gas space now clearly buzzing, the OMC action, upstream space, you name it. We've been discussing the gas space as well. Where do you find next 6 months of a move?
So I think OMC still offer value, and the OMCs from an EPS rating, RS rating, as we look at it in markets with India, probably still have some space, because I think now the broad expectations is with the budget, the government is not going to tweak much in terms of the pricing mechanisms as far as the downstream companies are concerned. And therefore, they are attractively placed on both counts. One, I think the Singapore GRMs are settling, which means refining margins should be far more stable, and expectations of good dividend yield because of the cash flow.
Mayuresh, I'll interrupt you. The markets have opened. Please excuse me. Let's look at the Nifty. A very, very strong uptick. It's now up 157 points, 21,850. It's taken out the first resistance and it's gaining very rapidly, Sakshi. Let's look at the stocks that are driving the Nifty on its journey up. I want to see what Infosys is doing, 1.1% higher, 1675. Reliance, let's look at Reliance, 24 rupees higher, 2877. How about HDFC Bank? These are the three heavyweights that decide the fate of the Nifty on a daily basis. 1476, about 0.7% higher. It's just gaining very, very rapidly, Sakshi. Nifty is now up 178 points, 21,860 for you. Let's just look at the PSU basket because that is where the action is. Okay, HUDCO 9% higher, fresh record high 224.80. NBCC taking it away 9% higher 154. ITDC 4.2% higher 796. Let's pay attention to what's happening in the FNO space, and I'd like to see the top gainer in the FNO space, which at the moment is Adani Ports 4% higher 1266. Indian Hotels 2.5% higher 506, fresh record high. BPCL is sticking 2% higher 518. Hero Motors, weak numbers, it doesn't matter, 4667 1.7% higher. HPCL 1% higher 473. Let's look at what Paytm has done. I believe it's down 20%, I'm sure. Yes, a fresh circuit 20% lower, barely any volume, 16 lakh shares traded, 487. No respite when it comes to these players. Let's just get Kiran in. Kiran, a blowout on the index and it's gaining strength. Any stock that catches your fancy here?
Yes, definitely. So on safer side, we are liking and we want to re-rate again Kotak Bank. Kotak Bank opened with the gap up and it fell down, but now again is getting the momentum. On daily front, if we check the Kotak Bank chart, it has formed the rounding bottom pattern and trading at higher or above resistance only. So Kotak Bank would be the preferred choice. 1840 is the current level. One can go long, and for the positional view, we are liking the stocks, and the target price would be around 1900 only. So Kotak Bank for the positional bet, one can buy at current market price or any dips towards 1830, 1820, keeping a stop loss of 1810, and target would be the 1900. Another stock we are liking on solar front, the many news are going again for the solar rooftop and everything. So Borosil Renewables will be the stock pick we are like to share over here. We are seeing that prices open at a gap up yesterday but could not sustain. Now stock is again getting the momentum and trading above the 5 days high, higher high. So the stock is into the bullish zone definitely. At current market price, one can go Borosil Renewables long. 638 is the current market price, keeping a stop loss of 610. And looking at price chart, we are expecting prices to touch 670, 680 kind of a target. So Borosil Renewable and Kotak Bank would be the preferred choice after looking at the openings.
Okay. Mayuresh, can you look at Titan? The company came out with its numbers, and we've actually seen an uptick both on the profits, the 9% surge, their revenue about 20% higher. But the brokerage houses have actually come out with some sell ratings on Titan, including when we talk about Jefferies, that has a sell rating with a 3600 price target, and Morgan Stanley has cut its target to 3290 now on the company. How would you really look at Titan? It's opening flat with a negative bias.
I think Sakshi, if it pulls back, I think it will come to the pivot levels that you're looking at market with India, and that will be a good opportunity for investors to probably look at the stock. Two things. One, I think the jewelry margins came off a tad bit in the quarter gone by, but I think the management has elucidated the reasons for that. Obviously, competition intensity is gearing up, but the unorganized segment is pretty and relatively large. So as the organized it moves into the organized segment, large players like Titan will benefit. The studded portion, the wedding jewelry portion in part of their jewelry segment should show a steady uptake, which are better margin segments. Obviously, watches did not perform that well on the EBIT front. The expectation is they should recoup it back in the next couple of quarters and continue that trend going forward as well. And wearables had a very wretched quarter as we speak. So I think on a consolidated basis, I think numbers should start picking up as we speak. And as that unorganized to organized happens, the premium valuation should come back at time. So any pullbacks close to those pivot levels of 33, 3400, if it comes through, becomes a good buying opportunity.
Okay. Very, very strong move is coming in
Sakshi,
on all the PSUs, Shell. The stocks that you've been tracking very closely, HUDCO up 9%. We're also looking at NBCC, that's 11% higher in trade. IREDA, no let up there. After a sharp move yesterday, it's again up by about 4.5% odd. Of course, the PSU banks are moving up. But on particularly PSUs like these, even BML is now 3.5% higher. Mayuresh, how would you look at these stocks?
So I think should hold on because I think the momentum is clearly there, but keep your risk management practices in place. So I think as a standard thumb rule, what we've got at Market Space India, what we've tracked markets for 60 years, any extension beyond 100% over the 200 DMA becomes your tool in terms of profit booking. So I think if that is what is happening with a lot of these stocks, maybe partially booking makes sense. But PSU banks selectively probably offer a good risk reward in terms of both earnings and expectation of the triggers that's got from the budget, both in terms of the bond portfolio as well as a large part of their portfolio, around 55% linked to MCLR, which gives them better pricing power as well.
Okay, Sakshi, let's just mark some stocks. HUDCO is now at circuit, 226 for you. And this is the first 10% circuit. Actually, it's the circuit for the day. And there is a buy order for 27 lakhs shares in front of me. Already 531 crore worth of transaction has happened, and it's getting better and better as far as the Nifty is concerned. Nifty futures have already crossed 22,000, and the opening is now very much on expected lines. Remember, we opened 120 points lower, higher. It is now 230 points higher, and it's going to be, as it seems, a trending day, that you open gap up and then you consistently make higher highs and higher lows. Now, what is driving this? It's been driven by Reliance, it's been driven by HDFC and HDFC Bank, and it's been driven by the entire PSU basket space. Let's look at the advanced decline ratio. We have about first 7 minutes of trade. It's completely in favor of bulls. 1660 stocks are in the green on the National Stock Exchange, 368 in the red, which is 5:1 kind of a ratio. Sakshi, all 19 indices are in the green, led by the Nifty Realty Index, 1.85% higher. Remember, housing, every single stock in the PSU basket related to housing or housing finance is in the green. Within the Nifty Realty Index, all 10 stocks are in the green. Nifty Energy Index, 1.7% higher, 10 stocks in the green. The Media Index, 10%, 1.7% higher, 10 stocks in the green. Nifty 500, our broadest index, which we checked the sentiment, has an advanced decline ratio of 382:117. So a bit of a no match when it comes to bulls versus bears. The bulls completely and totally in control of sentiment, and stocks are just running up, as you can see. Kiranji, would you have a view on the Nifty? Would you want to take an options call? It's the first day of the weekly settlement, maybe 20,000 call, 22,000 call on the long side.
The stock price is trading above, is at resistance level of 21,800, 21,900. If we check out the next weekly expiry is 8th February, right? Yeah. So 8th February 2200 weekly call is trading somewhere around 146. Looking at the call chart, if we check out the hourly or a 30-minute chart, stock price is, this option price is trading at higher pattern only. 150 would be the resistance, so it will be the conditional call. If 22,000 call is trading above 150, then one should go long above 150 level. Target price would be somewhere around 200, and for this target we would like to keep a stop loss of 130. So I'm repeating, 22,000 call, expiry at 8 February, buy above 150 level, target would be 200, and stop loss is somewhere around 130.
Okay. Mayuresh, just like how we were talking about the entire pack related to housing and housing finance, it's up. Like, Canfin Homes is now up 7% in the F&O space, Repco Home Finance, these smaller home finance companies are all up. Of course, there was some mention about, a new scheme for housing for middle class yesterday in the speech. And then, of course, 2 crore houses again to be built under PM Awas Yojana. How would you look at this space now? Do you think this is now going to be attractive?
It shall. And again, I think the real estate is going through a boom phase. So I think the 6-year cycle, you're probably in the 3rd or 4th year, which means there are a good 2-3 years into the real estate cycle as far as the up cycle is concerned. And therefore, a lot of players that are into the financing space of houses, the home finance players as we call them, should remain in the limelight over the next few quarters. Obviously, the additional trigger, Sakshi, for all these players is also the expectation of a rate cut at some point in the calendar year. So I think in the second half, as rates cut starts coming through, I think the first mover advantage that these players will get in terms of lower cost of borrowings and therefore an increased amount of spread and NIMs onto their balance sheet. I think that will really augur well. And a lot of fence sitters who are probably there with lower interest rate should probably also jump in, which creates a huge amount of a multiplier effect. So yes, PNB housing, LIC housing, if anybody's holding on, continue holding on because a large part of their portfolio is skewed towards retail, salaried class, which probably will be the most impacted in terms of a positive earnings connotation.
Okay. I think the first call that Kiran gave today was Adani Ports. Let's look at this one. It's, as I said, just running away as far as prices are concerned. 1273 in front of me when it comes to the price, and 4.5% higher. Kiran, fantastic call. Would you like to revisit the numbers on Adani Ports? This is accompanied by now a 1% rise in open interest, at least in the futures.
So first of all, thank you very much for the recognizing and revisiting Adani Port. This is the third week where we are discussing about the Adani Port. We started discussion somewhere around 1000 odd levels, and now stock is trading at 1200, more than 1270. At current market price also, we would like to re-rate this target price. Whatever dip is coming somewhere around 1250, 1240 would be the buy opportunity only. Keep a strict stop loss below 1200, and looking at long-term chart like weekly and monthly, we are expecting price target of 1400 to 1500, as we also shared this target previous week also. So we are stick to those target of 1500, 1600 level. And now we are revising our stop loss from 1100 to 1200. So in case anyone is holding this stock price, anyone would like to buy, wait for the dip. Fresh entry at current market price is not advisable. Whoever is holding, keep revising your stop loss and keep hold this particular stock. We are expecting price target of 1500 in short term.
Okay.
Okay. Sakshi, let's just look at the volume picture now. Just a moment, please. You have about 50% of equity in the first 20 minutes of trade on Adani Ports. That's a very, very substantial move that is accompanied by a rise in price. So it's both a price and volume breakout when it comes to Adani Ports. And in terms of the most active share, surprise, surprise, it's actually Adani Ports today, which is a rare occurrence. 409 crores worth of shares have been traded on Adani Ports, and it's the top traded counter as far as the Nifty is concerned. Reliance taking it away, fresh record high 2912, and you are up about 62 points, 2% higher. Kiran, your view on RIL?
Looking at Reliance industry chart, the stock price is formed a flag pattern recently. The stock price has given a breakout from 2600 level, and since then we are seeing the prices is trading into the heart of higher bottom pattern only. The day before yesterday, the stock price has formed a negative candlesticks pattern. Now the stock price is trading above those levels, and the stock price is trading above those highs. So the timing stock price is trading about 2900. One can take the aggressive bet on Reliance industry. So it's a conditional call. Keep a aggressive stop loss of 2880 level. 2880 would be the stop loss. Current market price is 2910. The stock price, if stock price is not breaking 2880, till then you can hold this stock particularly, and you can buy at current price also. Looking at all this chart pattern, we are expecting price target of 3000 in this current monthly expiry. So for 10 to 20 days holding period, one can buy Reliance industry at current market price, stop loss of 2880.
Okay. You know, the Nifty Realty Index is ticking higher now. 1.8% uptick can be seen on this one. We were just discussing the entire housing finance space, and you can look at macro tech developers now 5% higher, 1126 now. Phoenix Mills 4% up at 2438. Brigade Enterprises 2% higher. Prestige Estates Godrej Properties, Sobha, Oberoi Realty, DLF, all moving up in trade. Mirish, your conviction in terms of the real estate pack stocks, and which would be your favorite stocks from this space now?
No, so anybody holding on to a DLF or SOBA should continue holding Sakshi. But now I think the focus is that the price action has become a little bit too much. So you need to wait for
Okay.
pullbacks. But have a look at the proxies. Because if real estate is expected to do well, if the housing financials are expected to do well, what about the home improvement players, right? So
Yeah.
look at Green Lamb, look at Century, look at Acera. I think these players will do well over the next few quarters as demand comes back very, very strong.
Okay. Kiran, your view as far as these
Okay.
real estate stocks are concerned, anything that you like on the charts?
So basically, we are not liking at current market price because the stock price is moved too much high, and on daily chart we are seeing that the momentum indicator is an extraordinary bullish zone. But on the same line, infrastructure stock like Dilip Bitcoin, we are liking at current market price. If you check the current market price, the stock price is giving a breakout from double bottom pattern. However, this price is formed the pattern at a high top only. The stock price is taken a support of 20 days and 50 days moving average, and now with the bullish hidden divergence, stock price is trading at high level. So Dilip Bitcoin would be the preferred choice, and at current market price somewhere around 415, 416, one can go long at current market price, keep a stop loss below 400. And looking at the chart pattern, we are expecting price target of 450, 460 in upcoming time. So Dilip Bitcoin would be the better choice.
Sakshi, we'll focus on what's moving in the PSU space driven by news. We'll bring in NMDC on the charts. The counter is fairly strong when it comes to the price action. I see 230 in front of me, and this is the highest since, Sakshi, hold your breath, 2010. So this is a 13-year breakout on NMDC, and it's driven by a very, very strong trend when it comes to the January update of production, which was up 8% at 4.54 million metric tons. Your view, Kiranji, on what the charts of NMDC are telling us. At the moment, it's fairly strong in terms of the price action. 230.20 for you.
So at current market price, definitely we are liking this stock. As you mentioned, if you check the monthly chart, it's more than 13, 12 years breakout we are seeing, and we expect that prices keep continue moving up. However, if you check the monthly or a weekly chart, the momentum indicator is on extreme oversold territory. So for a short-term time frame, if you are looking for this the stocks to buy, then it would be a little bit risky. So keep a very tight stop loss of somewhere around 210. If price is breaking that level, then we can see some profit booking should come. Otherwise, we can expect prices to keep going up. So keep a stop loss of 210. Any dips or at current market price, we can go long on NMDC. Looking at the weekly or a monthly chart, we can expect prices to touch 250 to 260 level in the upcoming time. So give us a little bit time for this stock, because we have seen a vertical rise in previous months only. So there are chances that the stock price will go in some time-wise correction. We are not seeing any price-wise correction should come. So keep a strict stop loss of 210 and give us some more time to the stock. We are expecting prices to touch at 250, 260 level in the upcoming time.
Okay. Let's not
Okay,
lose
Sakshi,
sight of the markets
we'll now look
now,
at the
Shail.
Nifty 22,000 call, please.
Yes, exactly.
Yeah, the markets at day's high. Can we just see the 22,000 Nifty call on 8th Feb on the screen? Now 154. Remember, Kiran had just given a view on this one. The all-time high that I see on this counter is 430 rupees. Well, that's not in the vicinity so far. But Kiran, would you evaluate the trade again? Do you see fresh momentum coming in?
Yes, definitely. We already discussed this thing, and we expecting, looking at the call charts only, we are expecting price target of 200 maybe tomorrow or maybe day after tomorrow. I mean on Monday, we are expecting that Nifty to touch somewhere around again 20,000, 20,100, which the supply zone or maybe the resistance zone will occur for the Nifty. So considering Nifty chart, we are expecting 22,000 call 8 February should touch a 180 to 200 level in upcoming time. So one can go long at even current market price. keep revise your stop loss. We already shared the stop loss of 130. So as of now, our stop loss is 130. Once the call price is touched 180, you can revise your stop loss to cost to cost and wait for the 200 level. So as of now, you can hold this particular call with the stop loss of 130 and target of 180 and 200.
Okay. So the market's ticking higher at the day's high level clearly, and the stocks that are contributing to the Nifty right now include Reliance Industries, that's contributing about 47 points to the Nifty rally, ICICI Bank about 28 points, Adani Ports about 21 points, Infosys about 20 points, HDFC Bank 12 points, and TCS also about 11 odd points. These are the key stocks that are moving the Nifty at this point in time. Mayuresh, to you on the IT stocks that are again picking up pace, Infosys, TCS, the large caps, would you see them as favorably now at this point?
Probably yes, but I think the mid-cap juggernaut continues, Sakshi. And to that extent, I think stocks like KPIT, even if they've made late-stage bases, I think it's going at a base of around 5 or 6 as a count as markets with India, which means that the price action has been huge over the last few quarters, but they're delivering on numbers. So again, I think selectively between mid-cap IT, persistent on pullbacks is something that we'll probably look at. So the skew of the market is that mid-cap IT is still preferred because of the earnings trajectory.
Okay. Let me take your view also, Kiran, on the IT pack. Where do you see value emerge? We've been seeing stunning move in the mid-cap space continue versus the large caps, but do you see any reversals?
So as far as the Fed commentary concerned, we have seen last 2 days that IT stock were trading into the lower top, lower bottom, falling channel. Now it's again getting the momentum. In large cap IT, we are liking Wipro at current market price. Reason being, if you check daily and a weekly chart, stock was in consolidation phase and at very much lower level. Now stock price is given a breakout from that big grounding bottom pattern, which is consist over 2 years, I can see. So Wipro would be the better choice at current market price. Risk reward ratio is very much favorable. Stock price is trading somewhere around 470, 475. Any dips or at current market price, we would like to go long. Keep a strict stop loss of 440. And looking at the chart pattern, we are expecting price target of 550, 560 in upcoming time. So if you are okay to give a time frame or you are okay to hold this stock for a 3 to 6 months, we are liking Wipro. Definitely at current market price, the stop loss would be the 440.
Okay, right there. We'll take a short break right now. When we return, we will discuss what should be your strategy in the last 20 minutes of this morning trade that we are discussing. So stay with us on Business Today.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.
Welcome back on Market Today. It's a fantastic opening that's happened on the last day of this particular weekend as the market digests the most important numbers on the macro side in the interim budget. The Nifty is now, well, 250 points higher, 1% up at 21,946. There is a 400 point uptick on the Bank Nifty 46,586, and the IT index is now 500 points higher at 37,000. Unfortunately, Mayuresh has left, but the stock that I wanted to mark, and I am requesting Kiranji to also take a look at, is Bank of India. Mayuresh had suggested this stock at 118 rupees, and now it's running away to 148 as far as today's price is concerned, and this is accompanied by a very decent volume of about 54 lakh shares in the first half hour trade. Kiranji, what are the charts of Bank of India telling you?
So if you check the long-term chart on monthly or weekly, the Bank of India trading at level of 2008. So you can also consider a 6 years, 7 years breakout on Bank of India, considering the coming time. So if in case any dips toward 130 or 135, one can enter into the stock. Keep a stop loss below 130, which is this 20 days moving average. If stock price is not breaking that level, then we definitely we are seeing price target of 180, 119 upcoming.
Okay. Sakshi, I'll again mark a lot of PSU stocks, please. Yeah. NBCC now 17% higher, 165. There is a blowout that's happening on stocks such as NHPC. This one is also rising dramatically higher. HUDCO is 9% higher. BEML 5.5% higher, fresh record high. 4,000 has been crossed. And there are two public sector land asset companies called Hemisphere Properties, up 6%, 245, and something called BEML Land Assets, which goes by the name BLAL. These are again stocks where a lot of land assets of these PSU companies are concentrated. BLAL is trading at 285.70, 9.6% higher, and Hemisphere Properties is 6% higher, 246. Sakshi.
Absolutely, and you know, stocks like SJVN also ticking higher now, Shell, 5% up in trade as of now, and the entire power space is back in focus after yesterday's announcements on the solar rooftop move on 1 crore households that will give free electricity. So the entire power space, including stocks like Power Grid, they're up in trade. NTPC already marked as well. You know, about 327. Coal India is now up in trade. Kiran, to you, how would you really look at this entire power space? Many players which are ticking higher in terms of the renewable focus that the government now has.
So coming to the power sector, there are three different things we have to look out. So as of now, we are liking on power transmission or power producer stocks, which one is the Adani Power and another is the SJVN. So coming to the Adani Power first, stock price into the consolidation zone. Stock price already has crossed this resistance level of 560, 550 level. Since last 2-3 days, we are seeing that prices is closing above that particular level. So Adani Power, it at current market price, one can go long, keep a stop loss below 540. And looking at that consolidation phase, we are expecting price target to touch 600, number one. Now coming to the SJVN, SJVN is given a breakout from flag pattern at current market price. Anyone can go long on SJVN. Looking at that particular pattern, we are expecting price target of 160, 165 in short term. And for that matter, we have to keep a stop loss of 125. So SJVN and Adani Power, we are liking in power sector or maybe the energy sector.
Okay, SJVN and Adani Power in the power space shooting through the roof right now. Days high, 8% of an uptick on SJVN, a very, very strong surge. The other space that's really buzzing in trade is the entire PSU banking space that we cannot take our eyes off from. And the next stock that Kiran, I want your view on is Punjab National Bank, 5% higher today, 125 for this one. Last 5 days move is a strong 17%, 1 month surge 28%. You can all see these higher levels on 5 days, 1 month and even 6 months parameters, 108% surge. on that one too. A very, very strong momentum building on PNB. What would your call be?
So again, like as we discussed about the Bank of India, PNB is also trading somewhere around its level back to 2017. So here again, 7-8 years breakout on PNB also. Looking at daily, weekly, and monthly chart, all these three time frame, the momentum indicator in extraordinary overbought zone. So at current market price, definitely the fresh buying is not advisable. Any dips towards 110, 115 would be the advisable level to enter. Keep a strict stop loss below 105 or 110. And looking at monthly chart, there are very good chances if price keeps sustaining this 120 level, then there are very good chances in next upcoming 1 or 2 months, we are expecting prices to touch 160 to 170 level. So at current market price, we are not advising to add any further. Whoever is holding this particular stock, hold with the strict stop loss of 110, and any dips towards 120, 115 would be the again entry price for the PNB.
Fair point. Let's look at the all-time highs that have come in the markets. Of course, it's a very, very buoyant Nifty for you today, 21,921 for you, a double century, and we still have we've still done only 45 minutes of trade. Sakshi, the new highs, no surprises here. NBCC, 163.65, HUDCO, 224, SGVN, you've just marked 136.85, 7% higher. Strong move coming in on NHPC, 95.40, 4% higher. I am first marking the all-time highs in the PSU sector. Power Grid, 273.95, 3% higher. And let's look at Power Finance Corporation and Gas Authority, 453, 176, 11% higher. Let's look at now broader our search. Within the hospital space, Medanta, 1274, 6% higher. BEML, 4000 for you, 6% higher. Adani Ports, we've discussed with Kiran, it was his first pick for today, 5% higher, 1278. As Sakshi has been pointing out, the solar, the renewable, and the EV space is booming. JBM Auto, 2018, 2.5% higher. And stocks such as Indian Hotels, as also Reliance, as also NTPC, as also Power Grid at record highs. Sakshi.
Absolutely. There is a crisis of plenty, like Shail always uses the phrase, in the markets right now. You can see everything that's buzzing and buzzing very, very sharply in trade. The Nifty is now 21,912 at this point in time. All the sectors of the Nifty are positive in trade, and strong moves on the oil and gas space, 2% higher. Realty space 1.8% up in trade. PSU Bank similar move. Nifty IT 1.5% higher in trade. And remember, this is a heavyweight index. The Nifty Bank is up by 0.8%. A strong move really coming in, and all cylinders firing on the markets. In the Nifty 500 space, I can also spot now Aditya Birla Capital 9% higher in trade. Do you track this stock? Kiran, would you be able to comment on it?
Which stocks we are discussing?
Aditya Birla Capital.
Yes. So Aditya Birla Capital, if we check the current market price on daily price chart, the stock price is giving a breakout from double bottom pattern number one. Stock price is also giving a breakout from the falling channel, and stock price was trading above below its all moving average. And today's previous move is crossing its all long-term, short-term moving averages. And recently we have seen there was a long build-up is happening on derivative front also. So looking at Aditya Birla chart price, we are expecting prices to keep moving higher if prices keep sustaining above 180. So it's a conditional buy. We should wait for the closing for today's. If price is closing above 180, then it will consider as a breakout from double bottom pattern, and it will be also consider a breakout from the falling channel. So considering this both breakout, we are expecting price target of somewhere around 200. And for that target, definitely we should buy this stock with the keeping a stop loss of 170. So buy only above 180 if today's closing is coming, and after that we have to keep a stop loss of 170 for the target of 200.
Okay, let's look at more prices when it comes to how the market is appreciating this uptick within the F&O space. I want to mark record highs. Abbott India, very costly, 28,026 for you, 8% higher. We've discussed a host of PSU stocks, I'll avoid them. JK Cement 1% higher, 44.49. MCX 34.72, half a percent higher. I want to mark volume buzzers. These are the stocks that have done fantastically well in price and volume. I'd like to mark AB Capital. This is coming after very, very strong earnings, 9% higher, 183 for you on the charts. Now almost 2 times the 5-day average has been traded, and the quantity is 1 crore 15 lakh shares. Very, very big disappointment on Bata's earnings, profitability and top line. The counter is weak, 1454, and about 5,92,000 shares have been traded. This is about 1.6 times the average. You are seeing very strong moves coming in on Indian Hotels on high volumes, 34 lakh shares, again earnings buoy. Disappointment on City Union Bank, again because of earnings and therefore high volumes. And we've discussed NMDC, Canfin Homes, PNB because of price and volume breakouts, as also Titan and L&T. That's the broader structure that I have in front of me, Sakshi. How about you?
Well, absolutely, Shail. Of course, we can look at a whole host of stocks that are moving up in trade. The one that's again moving up in terms of the aviation space is GMR Airports Infra. 5% higher in the F&O space. Kiran, do you track this stock, and would you like to comment on this? Of course, even yesterday, the finance minister had mentioned that they are going to be increasing the number of airports, and there is a clear focus on tourism, including spiritual tourism boost. And we've seen in the past how Prime Minister's focus on Lakshadweep was there, and then of course the Ram Mandir inauguration. Spiritual tourism was also mentioned as part of the speech too. How would you really look at these particular stocks which are related to the aviation space?
So looking at GMR airport chart, looking at monthly chart, stock price has given a multiple flag pattern breakout, which are the bullish pattern. However, the stock price, if we check the momentum indicator, it was trading into the extreme overbought zone. We have seen that those things has been pulled off, and now again the prices and the momentum indicator both are getting steam. So at current market price, definitely one can go long on GMR airports. Keeping a very tight stop loss of somewhere around 75. We have seen the furious run up has been already came from 62 level to high at 86 level. So percentage wise, we have seen a fantastic move in last couple of months. So considering that particular move, the risk reward ratio is not in that favor. But looking at overall monthly chart and weekly chart, we are expecting a higher level should come. So for that, one should keep a very tight stop loss of somewhere around 75. And looking at weekly and monthly charts, one should expect target of 100 rupees definitely in upcoming time. So if anyone is ready to give a time horizon of 3 months to 6 months, then only you can buy GMR Airport at current market price with the stop loss of 75 and for the target of 1.
Okay. So that's as far as GMR Airports Infra is concerned. The other space I heard briefly Shail was talking about is the entire hospitals and the healthcare pack as well. We're looking at global health, for example, move up very strongly in trade today, 8% higher. And again, yesterday in this speech, it was mentioned that the government will focus on creating more medical hospitals and medical colleges as well going forward from here. How would you really look at these particular stocks from the hospital basket, particularly Narayana Health, Global Health, that's Medanta, Max Healthcare? How would you look at this entire space?
So looking at to this particular sector, our very much into the stock specific movement we are liking. Narayana already has given a fantastic move. So another stock which we are liking two stock. One is the Fortis Healthcare and another is the Apollo Hospital. So coming to the Apollo Hospital first, Apollo Hospital is forming a flag pattern which is very bullish pattern. Stock price is consolidating from 63.50 to 63 level. Once the stock price is crossing 63.50, we are expecting a furious run up in Apollo Hospital. So definitely it's going to be a conditional buy call. Buy above 63.50 for the target of 6500. And once the prices is crossing 63.50, keep a stop loss of 6300. So Apollo Hospital would be the conditional buy above 63.50. Another stock which we are liking is Fortis Healthcare. Fortis Healthcare has already given a breakout at 400 level. After that, prices had touched is 450 level. Since that level, the stock price is into the consolidation phase. During this consolidation phase, we are seeing prices is forming inverted head and shoulder pattern, and now the prices is giving a breakout from that particular pattern also. So at current market price, one can go long very aggressively on Fortis Healthcare, keeping a stop loss of 420 or a 417 level. And looking at current market price, we are expecting price target of 480, 490 in upcoming time. So Apollo Hospital and Fortis would be the preferred choice.
Fair point. Let's also look at Sakshi, the short coverings that are happening in the market. Remember, because of short covering, the markets rise further and further because the bulls then, the bears then get afraid and they start cutting their negative positions in the market. Within the Nifty, shorts are being covered in ICICI Bank, which is an index heavyweight, 2.2% higher when it comes to the pricing as far as ICICI Bank is concerned, and the open interest is down by 0.5%. Hero Motors, like I had said, there was a disappointment in the works, but this is a bull market. The stock is actually up 2.8%, and we have a 0.5% dip in open interest. Divi's Lab is doing fantastically well, 2% higher, 37.48, and open interest is decreasing. Within the index heavyweight space, there is ITC, the stock in the green, about 0.6% higher, and a dip in open interest to the extent of 0.3%. And surprise, surprise, HDFC Bank, some bit of shorts are getting cut on a daily, on an intraday basis. Let me just say that 0.5% higher on the price, 1480, and the open interest falling by 0.2%. Ditto for Axis Bank. So Axis, ICICI, HDFC Bank showing a fall in open interest accompanied by a rise in price, pointing to a short covering phase in the market. That's helping the Nifty, that's helping the Bank Nifty. Sakshi, your stock Canfin Homes is taking it away.
Absolutely, Shail. 7.3% higher as far as the F&O space is concerned for Canfin Homes, and everything is buzzing in trade. It's turning out to be a fantastic Friday, for us. And 228 points higher on the Nifty, 21,923. Adani Ports taking it away, 5.5% higher on the Nifty. BPCL, Power Grid, Hero Moto, Divis Laboratories, ONGC, Infosys, LTI Mindtree, Reliance Industries 2% higher, 2,900. ICICI Bank, the heavyweights along with the mid and the small caps, everything is in full throttle. Abbott, of course, you mentioned 11% higher for this very expensive stock, 28,400 as of now. Of course, sectorally, all the sectors are in the positive zone. Oil and gas taking it away, 2% higher. Of course, similar action on PSU banks, realty and IT. These are the sectors that are moving from the front at this point in time. The Nifty 500 action is very, very positive. And now looking at stocks like Easy Trip Planners, that's also buzzing in trade. We were just talking about the tourism theme, and 4.5% higher for this one. Aditya Birla Capital we were talking about. Now the other peer, Aditya Birla Fashion, is also moving up in trade. I can also see Trent that's moving up. So the retail space is also buzzing in trade as well. From the mid-cap IT, it's Coforge that's moving up. Infibeam Avenues. Auto stocks are buzzing very, very sharply in trade. So it's a day that's turning out to be a great day so far. But will these levels sustain is the big question. And will 22,000 mark now get sustained on the upside as well? That's the question. With that, we're now at the end of our morning trading action. Kiran, many thanks for being with us and helping us navigate through all of these stock ideas that you've shared with us. Shail, many thanks for being with us as well. Let's now wind down this edition. Nifty Bank 0.9% higher at the day's high. Nifty also at day's high, 1% up at 21,928. Stay with us through the course of this trading session as we help you navigate through the market moves after the budget as well, and the strategies post-budget throughout the course of this trading session as well. Many thanks for tuning in for now.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.
Hello and a warm welcome. Finance Minister Nirmala Sitharaman seeking to convey a sense